Can,
I don't know. I
can I
just
say one thing and then we'll
go
wrap
ahead.
up and start the
Yeah,
recap? Oh,
sorry.
I definitely need to get off within 30
Okay.
minutes. Okay.
Okay.
So last point I'll make about gold and silver trolls. You made an excellent point. People, first, I will be the first to admit, yeah, our fiat currency most likely will go to zero. That's just historical. Any person who studies investing knows that. Yeah, duh. Most fiat currency, like you said, eventually returns to zero. And they're going to be like, oh, Travis is going to suffer and lose all his money. No, I don't think so, because my mentor was a very smart guy, and he told me that whatever is going on in the world, is your job as an intelligent investor to find a way around the downfall. So even if
Mhm.
all of my little fiat investments go to zero, I'm pretty sure Travis is going to be smart enough to figure out a way to still come out ahead and to be wealthy when all the dust settles. Right? That's point number one. Point number two is talk all you want about my fiat currency, right? My worthless little fiat currency. I'm wasting my time. You know what my fiat currency has done for me? It allowed me to buy an asset called a rental home. And then my fiat currency plus renting out the house allowed us to pay off that home, to have a paid off rental. Oh, we bought with fiat currency that's worthless. You know what
Right.
else? My fiat currency just sent me on a cruise. So you can
Right.
talk all you want about my worthless fiat currency while
Yeah.
I enjoy the benefits that it's bringing me. So that's the point. It's like, gosh, you're so, like you said, you have to play the game. You can't just be focused on one aspect of it. And that's it. I'll enjoy my little fiat currency and the stuff it's doing for us. And if it goes to zero, guess what? I'll find something else. I'll find another way to make money.
Every currency that this is the other side of the argument that they never talk about, that when I used to watch these guys and me and James used to talk about this, it's like, okay, so worst case scenario, our currency goes to its intrinsic value of zero.
Hmm.
That doesn't mean people stop trading goods and services for something.
Exactly right.
And if you go back in time and you look at history where this happened in other countries like Greece and Germany, do
Hmm.
they today have fiat currencies? Well, yes, they do. Well, what? I don't understand. And
Yeah, I
that's
thought it
what
was
they're not
worthless.
feeding you. They're not giving you the
Yeah.
whole picture. It's like,
Yeah.
yes, they had bad economic times just
Hmm.
like we did. In
Yep.
we always, every country goes through bad economic times.
Hmm.
And their currencies did go to zero, but they got replaced by something.
Yeah.
They didn't find 90% of the population of Germany just starved to death and died in the streets because their currency went to zero. There
Yeah.
were hard times. Here's the other part that most people don't realize. More millionaires were made off of the Great
Yes.
Depression than off of the all-time highs in the stock market.
Exactly.
And the reason that is because they paid attention, because they didn't just tie their strings to one idea. This is the
No.
only idea that works. Just
Hmm.
like there's more than one way to come from South Carolina to California. You could
Yep.
take a plane, you could take a train, you can take a boat, you can take a car. You could walk, you could ride a bike. All five of those things are ways to get from South Carolina to California.
Yep.
And when trains don't work, I'll take a plane. And when planes stop working, I'll take a boat. And when a boat stops working, I'll take a car. There's just like investing. There's a million ways to make money.
Yeah, that is true, my friend. And that's an excellent point to start our recap on. Hey, everybody, we start our recap off with a rant. We're just going to roll with it, leave it as is, talking about our favorite internet trolls. So, this is Trader Travis. This is my Success Academy co trader, Peter, back with another weekly recap, kind of sharing our thoughts on the stock market, our biased thoughts, right? We're biased. And then, it's for educational, informational purposes only. We're not giving investment advice. That's one of the things we talked about off camera. Is like, don't take what we're using is like sole investment advice and try to create a strategy for it. That no, get a mentor. Get up under a mentor where you can ask them, specific questions and stop. That way you don't have to take anything we say out of context. So with that being said, what I'm going to do is I'm going to cover the market first. I'm back from my vacation. I'll cover some of the trades I made that were in place while I was on vacation. Then I'll give the floor to Peter so he can cover his case study. So let me show my screen here. So before I cover my trades, actually, let me just cover the general market. I griped about the fact that I haven't taken a vacation in like 4 years, and the market decided to have like a little mini correction. I wouldn't even call it a correction. It was like a pullback, just a like one, I think is 3% pullback in prices while I went on vacation. So I had all these trades open. I'm like, great, I'm gonna start losing money while on vacation. So before I keep wanting to go back to my trade. So let's look at the general market. Okay, this is the market, has been going up since the beginning of the year. All year has been going up. It had a couple of minor pullbacks, nothing major. And so I have just a simple trend line. Like I use Market Club a lot. I do have Market Club pulled up. So this is Market Club, and it signaled a red daily on May 2nd, a red weekly on May 7th. And the dailies are just short-term signals. The weeklies are kind of intermediate term. With the market may do intermediate term, go down. And so you can kind of see the same thing with the simple trend line. If you're a manual trader, you don't use software. I just use software. It just speeds up my analysis time. I have a lot going on. So I outsource, I hire the software to do a lot of the work for me versus me pulling up my chart, doing trend lines to discover the same thing, right? So you can do a trend line here and you see that prices actually broke through that trend line on about May 6th. It touched the trend line on May 2nd. So that's coinciding with those two signals I just showed you on Market Club. But it's quicker for me to pull up Market Club just to see that, make a few trades, and drawing a trend line and all that other stuff. So anyway, broke the trend line. It's still below that trend line. Prices are still kind of in a decline. Market Club did give a new signal here. Coming back to Market Club, it gave a new daily here. But as you can see, the market didn't take off after that daily, but it still didn't trigger a red daily yet. So it's still saying that in the short term, in the next few days, maybe to next week, the market should go up. So we're in a wait and see mode. We don't know if it's going to stay down here for a while, go sideways, start rocketing back higher again, or fall back again. We don't know. That's the beauty. Like, we don't predict the market. We honestly don't know, and honestly don't care. I found a way to create an investment strategy where I make money no matter what the market does. And it creates so much peace of mind versus buy and hold. You're always stressed because you only make money when the market goes up. That's a sucky way to invest, where you only win out of one scenario, at least in my opinion now. So, I'm not against buying. Well, I am against buy and hold, the traditional route, but I recognize buy and hold has some benefits. So my goal is always getting in my lab, my trading lab, and say, how can I create the benefits of buy and hold without the risk? And that's where I integrate buy and hold with options, and I've been able to do that. Get the benefits of buy and hold without the risk. So participate in the best of the market while potentially avoiding the worst. And so anyway, that was a tangent here. I don't know what the market is going to do. That's a summary. I don't know what it's going to do. I don't care. Now let's move to the trades to see what I actually did, because my trading style is to trade what I see, not what I think I'm going to see. Oh, I think the fiat currency is going to zero. Oh, that's what I think. The market or the economy doesn't care what I think. The market doesn't care what I think. So I always trade what I see. What is the market doing? When it was going up, I was in what they call bullish trades, trades that make money when the market goes up. Well, when I got my two Market Club signals that I just showed you here, let's come off the trend line because I didn't use that. When I got my two Market Club signals that you see right here, I offset my bullish trades with what I call insurance trades. I got a criticism one day, that's not insurance, that's a hedge. I really don't care what you call it. It's insurance, it's a hedge. All it's doing is protecting me from worst case scenario, right? If I'm in a bullish trade that can make 1,000, I want an insurance or a hedge that protects me from losing that 1,000, or if that makes sense. No, let's put it this way: if I'm in a position to lose, if I'm in a trade, it costs me $1,000, I'll buy a call option. I'll make money when the market goes up, right? I can make 100%, 200%. I don't know what I can make as unlimited profit potential, but my loss is capped at that 1,000. Great. When the market started declining right here, well, that call option is going to start losing money. So I placed some insurance trades to offset what I'm losing here. So now let me come to my Excel. I hope I said that clear. Now I'm going to blur this. Okay, great. I'm going to blur this out for the public. Fortunately, I can't show you this. This is privy to our members, but members, it's on my Trade Journal Excel because they get to see all of my real trades in real time, look over my shoulders. I'm trading this. This is going to be under the Trading for a Living tab. So at the bottom of that tab, scroll down, you'll see all these trades here, the insurance or hedge trades I made broken out, because this year I'm implementing 3 different insurance approaches to hedge. Let me make sure I get both terms in there, to hedge all the strategies I'm using. So I'm just going to show the end results here, because that's honestly what matters, is what you're doing working. That's always what my mentor drilled into me. You can have an opinion on fiat currency, you can have an opinion on Buffett's style of investing versus Ray Dalio. It doesn't matter. Opinions don't matter. Only thing that matters is results. So my mentor, I had an opinion about being in debt. I thought being in debt was okay as long as I could afford the monthly payments. That's what a lot of people who live to check, that's how they think. Or a lot of poor people, just from the environment I grew up in. Oh, I can afford the monthly payment, right? My mentor challenged me and said, Travis, if what you thought and what you knew worked so well, you'd already be rich. So stop. He said, how about you humble yourself, abandon what you think, and then listen from somebody else. This guy was wealthy. I was not. So I did. I humbled myself. I listened to what he said about getting out of debt and everything else. Magically, I listened to him, and guess what? I started making money. As long as I held on to my current beliefs, I stayed broke. So you always have to look at your results. Do you have a lot of money in the bank? Are you wealthy? If not, humble yourself and say, okay, whatever I know and whatever I'm doing is not working. That's assuming you want to be rich. There's nothing wrong if you don't. I want to be rich. So I'm always looking, is the results and what I'm doing bringing in more income each year, increasing our wealth each year? If it is not, I'm looking for a mentor. Okay, help take me to the next level, because obviously something I don't know doesn't work. I'm going way too long. So basically, results don't lie, right? Here are my results. I did some hedges or insurance trades. When the market pulled back 3% during the week when I was on vacation, all the insurance trades I set up, because I wasn't going to be able to look at the market, I said, if the market keeps falling, I want to offset what I'm losing. And I did wind up offsetting it. And so I made $13,000 while I'm on vacation, while not looking at my computer. Now, here I have over here, the goal is not to make money. My goal wasn't to make this $13,000. I'm not trying to make money on these little short-term pullbacks. I'm not a day trader anymore. I don't care about that. All I'm trying to do is offset the money I'm losing on my long-term bullish trades, right? My bullish trades are still in place. So the market is recovering as of today. I'm still making money. So I made money during the pullback, but I still have myself in a position. Peter called it opportunistic luck. I'm still in a position to benefit if the market goes up again. And so that was the point. I had to add up all these to say, let me add up my results to see if my little experiment worked of setting up short-term hedges or insurance trades to kind of offset what I'm losing when the market pulls back. And it did. And down here, per my strategy, now this is a little bit risky. I'm definitely not advising people to do this, but I said, okay, I made 13,000. I got a new daily green. It doesn't mean the market's going to go up from here. I don't know. It's just a short-term signal, but it's kind of a just in case. I put myself in a position that if the market does eventually recover and go back up, I'm setting up myself to receive more cash flow based on a different price point. But notice how much I am going to bring in, 3,900. So the summary there is I only risked some of the profit I just recently made. If the market does not go back up, then great. I only lose probably about 3,900. So I give back some of my profit. But if the market does go back up, these insurance trades are already closed out. So I've already booked that 13 grand, right? So if the market keeps going back up, I'll add another 3,900 to it. So that's best case versus worst case. And so let me summarize that in case you missed it. Best case scenario, market goes up. I've already kept my 1,300, that's booked. And I'm going to add 3,900 to it. That's best case. 13, worst case. 000. I keep saying 1,300?
You said 1,300, yeah.
And I said that a lot. Okay, I've already made 13,000. So this is best case. I already made 13,000. If the market keeps going back up, I'm going to add another 3,900 to that. Worst case is the market goes back down. I've already made it 13,000, but I'm going to give back some of that. I'm going to give up some of that because I'm going to take a loss on these bullish trades I made here. Either way, I still come out ahead 9, 10 grand. So that is what I always try to set up, win-win situations. Either way, the market goes up, I'm going to make more. Market goes down, I'm still going to make money, but not as much. So it's a win-win no matter which way I look at it. And with that, I think that's all I wanted to cover. So let me go ahead and turn the floor to Peter. I talked super fast because I realized I was going over. But did that all make sense, Peter?
Yeah, yeah, it did. And there were a couple things that I just wanted to, what?
I forgot to talk about why Peter does not need insurance unless you're about to
Oh,
talk about it.
I'll tell them.
Okay.
And I can cover that. But so real quick though, opportunistic luck. I use that term. I got that term from Ty Lopez. It just so happens. If you guys have followed us before or have been following us for a while, and I know the Success Academy members know this because we talk about it on our live calls. Every once in a while, Travis will have a trade and he'll be like, "Oh, I was lucky here," though. He never gives himself credit for the true reason why he made a lot of money on a trade, because he had a Walmart trade that made like, what was that, a 700% return or something.
Yeah, it was.
Here's something that so I used to say it's not luck, it's you were fortunate, because the reality is, and then I heard a video, I was watching a video by Ty Lopez. If you guys don't know who he is, look him up. He's a great, I love him. And he talked about this at a TED Talk. He's like, it's called opportunistic luck. If you don't think you're lucky, it's because, for example, if you are not lucky in the stock market, my question to you is, are you doing what we do? Or do you actually take part in the stock market, or do you pay someone else to take part in the stock market for you? Because if you pay someone else to take part in the stock market for you, you're never going to be lucky, because it's not your luck, it's theirs, right? The reality is that you cannot be lucky in something if you're sitting on the sidelines. You'll never be a lucky football player if all you do is go watch football games. You can't be lucky in football. You can't be lucky in a lot of things if you don't participate. So Ty Lopez talks about it. I used to say it to Travis all the time. Luck does happen, but it's the kind of opportunities you give yourself to be lucky. And so it's called opportunistic luck. So you could say what you want, but the reality is, why do we always look at the same people and say, man, they're lucky, they're lucky, lucky? They're lucky because they're actually taking part. They're actually stepping out of their comfort zone and doing things that most people don't want to do. So now going back to Travis had it on us, why doesn't Peter need insurance? Why doesn't I do place some of those trades, but I don't tip. Like, I'm not in any right now, because the reason is because I trade a lot differently than Travis does. And we were kind of talking about this off camera, where I'm a student of Travis's. Travis doesn't trade any strategy that he hasn't taught me. And I don't trade any strategy that I haven't learned from Travis. Everything I trade, I learned from Travis. Yet his returns are totally different than mine. Does that mean I lose money? No, I don't lose money. I just don't have these really sexy 70% returns all the time. I did on Apple the other week. I had 100% return on Apple, which was nice. But the difference is, it's because my trading, I'm a little bit lazier trader. I'm not involved in the market as much as Travis is. I'm working on getting out of that comfort zone, because it's a comfort zone for me. I'm comfortable. Like right now, the market, who knows what the market's doing? So for me, it's comfortable to be out of it. I don't have to worry about anything. Now, there's a downside to that. I'm not making $13,000 when I'm on vacation. That's the downside to it, right? I'm not losing any money either, but I'm not giving myself more opportunities to be lucky. So I don't do those insurance trades as much as Travis does, because I don't need to. I don't have anything to insure. So that's one of the things he was going to talk about. And the other thing I wanted to cover real quick before I cover my strategy real quick is, I need to kind of apologize, especially to some of the Success Academy members, because they do some things based on what I talk about in these weekly recaps, or I may talk about on webinars. And I realize that if they do those things, it's because I'm not being clear about what I'm doing. So if you've done things, or if you placed trades based on what you thought I was doing, and they didn't work out for you and they worked out for me, I apologize for that, because I wasn't being very clear about something. And I'm going to use Market Club as my example. One of the first things we talk about is you always have to match the time frame with the strategy. So if I'm using a Market Club daily trade triangle, I'm not placing a credit spread that's 45 days out based on that Market Club trade triangle. Vice versa, if I'm using a monthly, I'm not placing a weekly spread. They don't match. So that's one thing. So if I have not been very clear about that in the past, I apologize, and I'll do better at that from now on. So I just got to move a couple things that you guys can't see, but I can see. All right, so let me go into where I'm at. So this is AT&T. You guys know I have AT&T. And I want to be very clear about AT&T. I don't trade options. I don't trade verticals on AT&T. I don't use AT&T as an income strategy from the perspective of what we teach in the Success Academy. AT&T is a stock I own, and the income strategy is the dividend it pays. And that's how I trade AT&T. So I use times when AT&T is going down, I'll sell covered calls. So I'm in a bunch of covered calls on my shares, but one of the things I don't want to do is I don't want to get called out. I don't want to lose my shares because my income strategy for AT&T is the dividend. So if I get called away, I'm going to lose that income, right? So if you look, AT&T is going up, which is not good for my covered calls because now my closest ones are in the money. So I have two options. Really, I have three, but the first option is I can let them get called away. Well, we already talked about that. I don't want to do that. So the second option is I buy them back for a loss and I don't get called away, right? I buy those covered calls back for a loss as we get closer to that time frame. And I was thinking about this, and Travis and it was funny because I was telling Travis what I was thinking about this past week. I was thinking, well, what if I buy call options at the price point they're at right now that expire at the same time my covered calls do? I can evaluate my position, and if AT&T is above $32, that means my shares are going to get called away. I don't want to lose them, but I'll have a call option at $32 that gives me, and if you guys know your basics, what does that do? It gives me the right to buy AT&T at $32. So so everything washes back out. There's a cost involved, obviously. It's not going to make me money, but the way I'm kind of working my strategy is to minimize my loss or to evaporate my loss per se. So I'll show you what I did so far. There's two strategies I did. So in my paper trading, I just went out today and I bought 500 shares of AT&T. I bought it at the market price, $32.43, which is right around what I paid for my real shares. Okay. Then I turned around and I sold covered calls on all those shares at the same strike price. So at $32, I sold the covered calls. And I haven't done the math on this. Huh?
You bought calls.
I'm sorry. I bought calls. My bad. Oh, I didn't sell my covered calls yet. That's what I forgot to do so far. That's the one thing I forgot to do.
Okay.
I haven't done those yet. Yeah, I bought calls. So I bought 5 call options, right? So those cost me $1.11, right? So about $500 for those. And then I did this backwards, Travis. I did sell. I sold 5 cash secured puts
versus the cover calls.
Yeah, I did it backwards. All right, so I totally screwed this up. We were talking when I was doing this. So this is what I meant to do was sell covered calls here.
Go ahead and do it now.
I've got to. I did it on the wrong side. All right, so I want to sell these covered calls here.
Oh, hold up. Because if you sell those, you're going to sell the ones you currently own. Because you own 5, so you bought them. If you sell 5, it's not going to show as a cover call. It's going to look like you're just selling the 5 you own. So you're going to have to do it at a different price point.
Okay. I follow you.
I learned that by mistake. I was like, let me sell it. I said, I want to buy a call and sell cover calls. And then I look and it wiped out. I'm like, what happened? It's like the platform didn't recognize I wanted it to be a cover call.
Oh, that's weird. Okay. So I'll do it at the $33 price point. It's going to kind of throw off the scenario a little bit, but it'll kind of give me. So let me explain why I'm doing this. So I don't know. So this is a theory question. I could have asked Travis, hey, what will happen if this plays out? That's a theory question. Travis is going to look at me and say, all right, my name is Travis, not Merlin. I can't tell you what will happen. It's a theory question. So the way we answer theory questions is something I learned a long time ago because I used to ask a ton of theory questions to Travis, and he would say, yeah, finally he would say, well, go do it and you'll figure it out. So what I'm trying to figure out is, okay, I don't want to get called away. So I don't know what it will cost me to buy back my covered calls as we get closer to expiration and it's in the money, right?
Mm-hmm.
So I don't know the answer to that question. I could probably figure it out. I could do a ton of research. I'm too lazy. I don't want to do all that research. So what I thought of was, well, if I buy call options right now, that will protect me of losing my stock, because if AT&T is in the money near expiration, or let's say on the day of expiration, so these expire on the 19th of July. So let's say it's 19 July and AT&T's at $34. I know I'm going to get exercised, right? I know they're going to call away my shares. So I'm going to go ahead and exercise my call option and buy 500 shares at $32. That's what I'm going to do. That now I don't lose my shares. But the other scenario that Travis gave me was you can sell a cash secured put at the same price point, right? Isn't that was the other thing you were talking about? Sell a cash secured put.
Yeah, I said a sell in the money one because you want to get a sign.
I want to get a sign.
Yeah.
So I didn't sell an in the money one. So I screwed this all up. So I'll have to I can reset everything actually, because this is a paper trading platform. So I can reset everything. The bottom line here, let me try and make this quicker because it's gone on too long because I've taken too long to talk about it. The bottom line is I want to see what scenario puts me in the best position without losing my shares. That's what I'm doing. So I'm just kind of playing around with this. And the reason I'm doing it, especially on paper, is because this is live on my real account. The reality is on my real account, I'll just kind of look at this. I basically have 3 sets of covered calls because I own 1,500 shares. So I don't sell all 1,500 covered. I don't sell one covered call for 15 strikes, right? So I don't do it that way. I adjust them out over time. One, because it gives me a better revenue point and it gives me more of a chance to keep that revenue unless AT&T continues to go through the roof. My fear, I didn't like to use that word, but my fear or concern was if AT&T keeps trudging higher and eventually goes to what it was at a couple of years ago, which let me pull up sorry you guys, I'm on a different platform, so I don't have my thing set up. It used to be at $43, right? So my concern was AT&T, I get called away from my shares, AT&T keeps going up. I don't want to have to buy it at an all-time high. So, and I'm losing out on that income. So that's why I'm looking at this strategy. That was my concern, that would happen. So that's kind of what I'm doing. I'm not in any other trades other than my long-term Buffett trade with SPY. Every other trade, I did actually do a couple bear calls. I think I covered it on my last call, on our last weekly. I did a couple bear calls that lost money on me. As a matter of fact, those insurance trades, kind of like what Travis does, I've only done it 3 times. I'm 0 for 3. Haven't been successful on any of them yet, but that's okay. As I said last week, I'm not doing anything for a couple weeks or a couple times and then saying, oh, it doesn't work and abandon it. I'm going to do it for at least a year, but the reality is I've kind of adopted a principle that Travis taught me, which was, no, you just keep trudging along until you're successful. So that's basically what I'm going to do with those.
Yeah, and I do want to point out, excuse me, I don't want to get caught up on the loss factor because remember, you didn't do them to make money. You remember why you placed those?
Yeah, it was just to make up for what I was not making.
Nope, wasn't even that. You don't remember? I'm the one that encouraged you to do them. Yeah, the 3-day
Oh,
spread.
yeah, that's right. I did them because I was uncomfortable with the time frame.
Go.
That's right.
A growth
that was why I did those. Yeah, and it turns out they were no big deal. The only thing that it didn't frustrate me, but I'm done with my May trading for the most part because I've met my goal. I was at like a 4.5% return. I was at a really high. Maybe it wasn't that high. I think maybe 4.2 or 4.3% return. And then I placed those 3 days and they didn't work out. So I'm at like a 3.9 or somewhere in there. I'm still at over 3% return for May.
Oh,
which
poor
is
you.
which is fantastic. But I do have to work on June and July because June and July I'm at nothing right now.
Yeah. So, in my humble opinion, that trade was a success. You lost money, but
It was, yeah.
yeah, because
It
yeah,
did, and it gave me the biggest thing I guess I didn't even talk about that I should talk about was it didn't play with my emotions as much as I thought it was going to play with
yep,
my emotions. I just placed it and I said, all right, if it works out, it works out. If it doesn't, it doesn't. It didn't
bingo.
work out, and I was like, oh, whatever. I didn't actually take that big of a loss. I don't have my spreadsheet open because my computer had problems
Yeah.
when we were getting on, so I'm on my laptop, you guys, so I couldn't show my spreadsheet. But I think I only took like a $40 loss across
Yeah.
the three accounts I did that on.
Yep.
So, but yeah, you're
That,
right. That's right. That was a trade to get over the fear because I told
uh-huh.
Travis that I'm kind of fearful of trading a 3 or 4 day spread. And he's like, well, then you're going to do it right now. And he forced him to do it. And I'm so glad he did. So, and you know what? That kind of drives home that point that Travis talks about. Travis is my mentor, and you can't have him as a mentor, but you can go reach. No, I'm just kidding. He's my mentor, but it it wasn't. That was my opportunistic luck. I would have
Mhm.
never had Travis as a mentor if I never took the step of joining one of his courses.
Uh, mhm.
That would have never happened, right? So, but that's what you guys have to do. You have to start hanging around with people that take you out of your comfort zone, and that's what Travis does. He takes me out of my comfort zone. He makes me do things I don't want to do that I know I need to do, and I'm a better person for it. So
Yeah, and it's vice versa. That's why you keep saying mentor, but I use the term friendtor because you're a
I
friend and a
know,
mentor. Because Peter's my
but it
mentor
seems
too.
it
But
seems
it's
like every time Travis follows something I do, it doesn't work out for him.
not true, not true. Uh, so like, and just to give you props so people don't think it's all about me is like, no, Peter's more outgoing, I guess, than I. I am a hardcore introvert. Like I'm the guy that's in the corner of the room not talking to anybody. Like even this, the camera thing. I resisted so long doing facial videos just because it was outside my comfort zone, and my business mentor just made me do it one day. So Peter wants to do like live classes and things like that, completely out my comfort zone. Like I'm a hermit. Like I don't leave my house. I hate traveling type of thing. But I'm like, okay, all right, it's uncomfortable, but I'm gonna do it. Peter's the guy that's super comfortable talking in front of people, no big deal to him. So that's how he's pushing me out my comfort zone. We've already agreed, yes, we're gonna do this. We're gonna do live classes, meetups, things like that. Because same with him, I recognize it's a, I don't know if it's a fear, it's a comfort zone thing. Not really a fear, nothing's gonna happen, but it's like a comfort zone thing. So he's pushing me out my comfort zone. And I know it's only win-win. It's just a benefit. You always grow. The more you grow, the better your life is, in my humble opinion, or what Tony Robbins said. That's when people are the happiest, when they're growing. Depressed people are usually people who are not growing. So,
Yeah. It will be something though that will be a lot more fun, and I think it's something, especially like we talk to you guys about finances and stuff. We show you trading, and it's really important that you get your debt under control because I see in the job I do today, a lot of what I see is, you know, uh, people are in serious financial disarray, and it's mainly because no one teaches you how to manage the money you make and how to
yeah.
use that money to buy the things you want instead of buying the things you want with the money you make. Totally different concept that you learn when you start doing things like this.
Hmm. Yep.
So
Learn from people who actually have money. That's what benefited me. So, well, is that it? I think
that's
that's a
it.
good point to wrap it up on. So, all right, everybody. Hope, as always, I hate saying hope. I pray that's added value to your life. But anyway, even if it doesn't add value, leave us a positive or I don't like the word constructive. Leave us some kind of feedback in a positive manner, so where we can adjust how we do these recaps to serve you better. As Peter always says, if you have something negative to say, most likely you'll be ignored. That kind of energy deserves to be ignored. But no,
Here's
just
a
kidding.
here's a challenge. If you always think of negative things when you watch something or you want to leave a negative comment, here's a challenge for you. Find something positive out of whatever you're thinking about that's negative. Try and find a positive. So if if your negative is what we're doing doesn't work, then give us a positive to it.
Yeah, offset it. Yeah. Be a big boy. Give us the negative, but offset it with one positive then.
Challenge yourself.
That's a challenge. All right. That's a challenge for all the trolls. Hey, with that, we'll see you all in our next week's recap. All right. Bye-bye.